All right, cheers to you and welcome back to Happy Hour episode number 30 with the Lincoln, where I do my very best to answer your questions and help you become a consistent and profitable trader. This is for the week ending on January 28th. Hard to believe already that the first month of 2018 is almost in the history books. Seems like just yesterday there we were celebrating the new year. So whatever you set out to do this year, whether it was a financial goal, a personal goal, just whatever you set out to do this year, I hope you're starting to see that progress in your life. You're starting to achieve that. Now, before I get started, I do want to make a couple announcements. Don't forget, as I said this last couple of these videos, that the free trial to our live trade room is ending on February 4th. So now's the time you get a chance to trade with us without making a financial commitment. You can always trade with us, but the free trials are going to expire on February 4th. I'm going to put the link down here right below. Now, for those that are listening via podcast, it's thelincolnlist.com, and then click on the icon that says Trade Room. Now, I know that some of you that are watching this realize that you can now listen to this audio in a podcast format. So rather than you sitting here enduring 10 minutes of this grizzled mug right here, which may be repulsive to some of you, I don't know, you can listen to my nice, gentle, soft, and soothing voice through the stereo speakers of your home or car or wherever you may be listening. So I'll put those links down there in the description box as well if you want to take a look. So let me just do my best this week to answer your questions. Got my whiskey out. This is Talisker Storm. I've kind of polished off this dram almost here already. Now, before I do start though, I do want to remind you, I'm going to put the link up here again to my email address, support@thelincolnlist.com. Send me your questions. If you guys have a question that you want to put into any of these future happy hours, I'll do my best to schedule that in. Support@thelincolnlist.com. Challenge me. Send me something exciting that I can feature here on the next few episodes. So our first question here, we got some good ones today. We're going to talk about adding to positions. We're going to talk about lifestyles of traders and so on. But the very first question that we have today is about adding to position. So here's this email. Doug, love your videos. Oh, that's so sweet of you. Do you have any strategies on when to add to a trade or take half off to protect gains or protect a trade that is trending in your favor? Very good question. Now, this has a lot to do with, for me, I'm going to give you my experiences. I'll share a couple of other experiences that I know traders use. This is something that's trader specific based on their strategy. And for me, it's based on the strategy I'm using, the type of stock that I'm trading, and the current market conditions. I try to, because one of the things we talked about in the last whiteboards and some of these last happy hours is maximizing your gains. And one of the best ways to do that is when you capture a trend, whether it's uptrend or a downtrend, and you're on the right side of that trend. If you can capture that trend, then that's when you're going to make the most money as a trader. So it's always nice to trail up once you have some profits. So here's how I do it. If I'm into a trade, I'm going to use breakout trading for an example. Unfortunately, I can't show anyone any charts. But if, let's say I take a breakout. Now, if I buy a breakout on a stock and it immediately goes parabolic, for those that are listening for the first time or not quite up to date on what stock market lingo is, parabolic is when you get this big candle, this big price increase immediately, and the stock just goes vertical like a rocket ship straight up in the air. To me, that's no longer a trend. So if I happen to buy a stock and I'm fortunate enough to be in it, and then it goes parabolic and it gets vertical, if I get a very big move, or basically what I'm saying, if I get a very large move in a stock position, whether I'm short or long, the moment I get into it or within a very short period of time, I'll usually sell that or cover it if it's a short. Because I factor in that once you get a big move, especially if it's something that breaks low a day, probably one of the reasons that it did that is because people were stopped out, and then you'll often see charts where they blow through low a day and then snap back and start working their way up to highs. You'll also see that when stocks break out, they'll go vertical, and then they'll often pull back quickly. So if I get a really abrupt big move on the trade, then I will go ahead and just get rid of it right away, and then I'll wait for the stock to settle down and maybe reset itself up before I re-enter. Now, if it's a little bit slower of a breakout, yes, I definitely want to use a trailing stop because I want to be able to maximize, or possibly I might have the opportunity. See, the thing is, when you get into a trade, you never know which trade is going to be that big winner. You can only trade the setup and then let be what will be. So when it actually breaks out, I'm going to stay on the breakout side for explanation purposes. Once a stock starts to break out, and I get a move maybe 50 to 60 cents as a day trade, I'll trail up to at least break even. And then if the stock continues to move in my direction, then I'll continue to trail up candle by candle on a 5-minute chart. That's how I do it. Now, I do know that a lot of traders will use a strategy to where if they're buying a breakout or shorting a breakdown, they'll go quite heavy on that because they have a very tight stop. Again, this is something I can't show you on a chart. But what they'll do is when the stock pops a little bit, they'll immediately take half to 3/4 of that position off the table, and then they'll put a stop at BE, break even, for the remaining part. That way they put a little bit of money in their pocket, and then they have consider a little bit of lotto. You got some money on the table that if the stock continues to rip and go higher, that you currently have a position. So yes, I like to do that. So basically, to wrap this up quickly, if I get an abrupt move, in a stock, a quick move, 50 cents, $1, within the snap of a finger or 1 or 2 minutes, it just gets vertical, I will close that position out because more often than not, it will retrace or back test that move. If it's something that's a little slower and it's moving up, it's flagging, it's building a pattern, then yes, I definitely will trail up because that's what we really want to do is we want to capture the maximum amount of trend that a stock has to offer. That's how we make the big bucks. So on to the next question. How interesting is the lifestyle for you as a full-time trader? Is it something that's hard? Is it exciting? It looks like most traders only work an hour or 2 a day. Thanks for the vids. Well, you're welcome. Well, okay, let me answer this one because I know when you first get into stock trading, you think that this is an exhilarating career. And of course, the media has done nothing to dispel that. You see the movies Wall Street, you've seen Boiler Room, you've seen The Big Short, and it portrays this lavish lifestyle. And of course, you see that on social media too, portraying the lavish lifestyle. Look, I got models, I got Ferraris and Lambos, I have all this great stuff. But that's not normally how it is. In fact, you'll find that most consistent professional traders are quite boring. I mean, your job should be boring. If trading is too exciting, if trading is too exhilarating for you, then you're doing it wrong because you're in it for drama, and that's not going to last because we're not in this job to live this roller coaster life. We want consistent profits. I mean, if you're trying to make a living and get paid every week or every day and pay bills, you don't have the time to tell your cable company or your mortgage company, look, I'm just on this wild roller coaster or the market's down. You need to be consistent. And you'll find, as we have said so many times, that professional traders trade just 1 to 2 setups. They spend 90% of their time, I do as well, just looking for something rather than trading. So out of a trading session that may last 6.5, 7 hours a day, you might only take 2 to 3 trades that day. And out of that, you might only be in those things for half an hour. So the rest of that time, 3/4 or more of that time, you're just looking for something to trade. You're thinking about your next move. You're actually not in a move. So no, if you're a successful trader, it's not exhilarating. Your lifestyle isn't crazy. Now, you certainly can spend your money. You live a great lifestyle. You've seen how most of us live. We get to do what we want, when we want. But is it exciting? Is it thrilling? I guess so, in a way. If you're making money, you're doing it from your home, you have no boss, that's exciting in itself. As for lavish and luxury, that all depends on the stock. But your actual business itself should not be drama. If it's too much drama in your trading, you got a big problem. Now, as far as people working 2 to 3 hours, you may only trade for 2 to 3 hours a day, but trust me, the traders aren't working for just 2 to 3 hours a day. They're putting in a lot of homework at night. Like I said just a minute ago, you're spending all that time looking for stuff rather than trading it. You're thinking, you're rehearsing your moves, you're practicing your moves in your head. You have a plan A, you have a plan B. And if you guys aren't doing that, that's the kind of stuff you have to do to make it to the next level as a trader. It's just like a professional athlete. You see them play on Sunday or whatever day it is, but that's all you see is the game. What we don't see is all the stuff in the weight room, the dieting, the film, all of that stuff. The rest of the week, that's what they're doing. They're just playing for a few hours on a Sunday. But those that prepare well, those that train well, take care of their body, take care of their mind, they're the ones that succeed. Traders are the same way. It's a performance-based business. So I hope that answered the question there. Last one for today will be, I hear in your videos you say not to paper trade, but almost every other video I've seen on YouTube, they say you should always start out on paper trades until you learn how to trade good and then you go live. That sounds like it makes a lot more sense. If so, why are you so against it? Isn't that what paper trading is for, to help new people? No. Paper trading is only to help you learn a platform. Now, I understand a lot of people say, don't start out with real money, learn. And I can be a little bit lenient with that. I know I've often been very critical about paper trading, and I'm going to continue to be critical about it. And I'll tell you why in just a second. It's okay if you spend a day or two just getting used to your platform. If you're brand new and you know absolutely nothing about trading, then yeah, it's okay for you to trade a couple so you can understand a stop order, a limit order, an OCO order, or whatever it is. You can kind of learn how to enter and execute those orders. That's important. However, you don't want to continue to do that because paper trading removes the single biggest element that causes people to fail. What is it? You've heard me say it before. It's emotion. This whole entire business that we're in is emotion. It will take you just very small amounts of your time to learn a strategy, to read a chart. Heck, it's all in green and red. It's two colors. It's a bunch of lines. I mean, that's just first grade material. Where people get paid and make money is through the emotions. What do you do when the trade's not working for you? How do you handle that? How do you minimize your losses? How do you put down your ego? How do you control your temper? All that stuff. It's emotion. And if you're not trading with real money, then you're not learning any of that emotional component. You're robbed of that. That's why people get really aggressive. They'll trade thousands of shares. They'll double down because it's paper. It doesn't exist. And that's what you're trying not to train yourself for. You need emotion. That's what you're trying to train yourself for is emotion. I would rather you trade one share if you're worried about blowing up your account. Trade one share, 10 shares, 15 shares. But just trade real money because I promise you the way that you look at stocks, the decisions that you make in any financial instrument will drastically change with real money versus paper money and fake money. Because you may take a trade that's no good, but you'll do it with paper because you don't care. Because if you lose, big deal, right? But you won't do that with real money, and that's what you're training yourself. Real money only. Couple of days on a paper account, but after that, no. Trade one share, 5 shares, 10 shares, don't matter, but trade real money because you're just going to hurt yourself, going to set yourself back emotionally, and that's not what you want. So guys, that's going to do it for me, man. I'm glad you joined me on this happy hour. I hope you like it. Again, send me your questions. Challenge me. Give me some great stuff to talk about because sometimes I get burnt out in the noggin up here, and I just don't know. I just can't think. I read these questions, and I do my best. So challenge me. Send me your questions. Don't forget about the free trial. Until the next time, until next week, cheers to each and every one of you that clicked the mouse. Take care.